What is going on, traders? Welcome back to the Traveling Trader. In this video, we are going to get into Tesla, why the news headlines are just a bunch of FUD. FUD is really a crypto term meaning fear, uncertainty, and doubt, but basically why the Tesla headlines don't really represent what actually happened, and what actually happened is much more benign than the headlines represent. So we're going to get into why you shouldn't focus too much on that, and what you should do if Tesla does end up dropping a little bit because of these headlines. Then we are going to get into the top 4 stocks to buy right now. We are on a massive streak. Just last Tuesday, June 22nd, I released a video. I talked about XLF, I talked about Nike, TTD, and I said that I was buying calls on Vertex. We closed those Vertex calls for 43%. Nike hit all-time highs, but I have a funny story to tell you about the options play. TTD is absolutely ripping post-split, and XLF is moving as we thought it would, especially considering the fact that the banks just passed their stress test, which we will get into the market update. So first, I will talk about Tesla, then I'm going to give you a brief market update, and then I will give you the top 4 stocks to buy right now. The top 4 stocks that I'm actually looking at. Obviously, we always look for value, meaning stocks that right now are trading less than we think they should be trading at. Everything will be linked in the chapters below, so feel free to skip forward or backward to the part that you want to watch. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of the Tesla story as well as the stock picks here. One more thing, make sure you follow me on social media. We had our first international meetup the other day. Unfortunately, due to COVID rules, we can only fit 10 people there, so the meetup was limited to 10 people, but I was grateful for every one of you 10 that came out. We had an awesome time here in Dubai, so check out the YouTube stories or the Instagram stories if you want to see those updates. And I hope to include each and every one of you in a future meetup at some point as we continue to roll them out and the economies continue to reopen after COVID. Without further ado, let's get right into it. We'll start with the Tesla story. All right, so the headlines portray that the Tesla woes continue in China. 300,000 Tesla cars were recalled in China. There were Model 3s, I believe, and Model Ys as well. However, if you peek under the hood, no pun intended, although do Teslas have hoods? I don't know. Either way, if you look under the hood, you will see that the story is much more benign. And the way that Teslas are designed and future cars will be designed, a lot of these fixes can be deployed over the air, meaning that the cars don't necessarily need to be recalled back into the factory, that the fix can actually be deployed over the air through software, especially if it is a software issue. So as this story on Seeking Alpha here details, the recall will be a free remote online software fix, will cover almost 250,000 China-made Model 3s and Model Y cars, as well as 35,000 imported Model 3 vehicles. The crazy thing, some of these vehicles were produced in 2019, so it's not like this is an issue with some of their new production line. If you've been following Tesla news, you know that in May, the deliveries came in much stronger than expected, and the hope is that June follows the same trend. There is a catalyst watch this week as Tesla is set to report deliveries at the end of this week, so we'll know if they actually beat the June expectations or not. If you look at Tesla's chart, you will see that it is up 19% this month. We continue to sell cash secured puts on Tesla. This is like free money. I'm now running over a year that I have not been assigned on a cash secured put on Tesla. So it literally is free money. For the newbies, in summary, a cash secured put is when you sell a put, and if Tesla never hits your put price, then you get to keep the money that you sold it for. If Tesla hits your put strike price, then you're obligated to buy 100 shares of Tesla at that strike price. So when Tesla falls below $600, we're constantly selling like the 450 or 475 puts, and obviously Tesla has never gotten there in over a year. So with that said, on Monday, if we do see a drop in Tesla's price, although I don't know that it will be that significant, especially now that more details are coming out about the fact that it is an over-the-air software fix, but if we do see any weakness in Tesla, in my view, that is a sign to buy for the long term and or sell cash secured puts. Again, look out for the alerts in the Discord group, link in the description below. All right, so just a brief market update here before we get into the top stocks that I'm watching right now. There are a few catalysts here. Obviously, number one, the infrastructure bill. The White House announced that they have a deal, meaning a bipartisan deal. Obviously, it still has to pass the House and the Senate, But the news from the White House currently is that they've made progress on the deal. That is why stocks continue melting up. That is catalyst number one, and obviously we'll talk about some of those stocks. Catalyst number two is that the Federal Reserve released the results of the annual stress test that they conduct with the 23 US banks. The Federal Reserve basically goes through these recession simulations and sees whether the banks can actually survive a multitude of recessions, and all 23 banks showed that they can actually survive them and provide lending easily. Now, what this means, and part of the reason that we initially got into XLF, which is the financial sector of the S&P, what this means is that we could see big payouts in the form of dividends and stock buybacks as early as Monday from the time of this recording, which is tomorrow. Spoiler alert, the financial sector is one of the sectors that I think you should be focusing on if you were going to start investing today. And the last catalyst is obviously the elephant in the room, which is the full reopening. Even though there are talks of variants, currently it looks like the markets are pricing in a full reopening and they have completely forgot about the recession and the height of the pandemic last year. All right, now that we went over Tesla, we went over a brief market update, let us quickly get into the top 4 stocks that I'm looking at right now. The first stock that I'm looking at is Baidu, ticker symbol BIDU. There are a few reasons for this. There is a technical breakout here. We gapped up, broke above the 200 and the 50-day moving average, as you see here on my chart. The MACD turned bullish. We are seeing a ton of call buying coming in. Just on Friday, there were almost 11,000 calls open for the 200 strike price expiring July 2nd. And you could see the same thing replicated if you look at the further expiration dates. Almost 8,000 calls bought on Friday at the $200 mark as well. If we take a look at the order sentiment, you will see that there is increasing bullishness. Now, how this is calculated on Market Chameleon is if bullish calls were bought at or above the asking price, right? And you could see here that currently there is 91% bullish trades versus 9% bearish trades on Baidu. So the market is pricing in a big upside move. If we take a look at tip ranks, you will see that tip ranks, Baidu is recommended as a strong buy. Everyone from Loop Capital to Mizuho to JP Morgan, HSBC, Morgan Stanley, all recommend Baidu as a buy. There is almost a 52% upside to get up to the average investor target price of $308. And if you want discounts on any of the tools that I'm using, whether TipRanks or Market Chameleon or whatever, just find the links in the description below. Support the channel. All right, stock number 2 that I'm looking at is Citigroup. We've traded Citigroup all last year, but I've been waiting for Citigroup to find support here before re-entering. And if you see here, it found support at around the $67 range, was oversold on both the MFI and the RSI. If you don't know what those indicators are, you can Google them. And you can see that the MACD is starting to turn bearish. It does pay a healthy dividend. As I just talked about with the bank stress test, we could see an upgrade of the dividend as well as another round of stock buybacks. Another reason that I'm big on financial stocks is because I think that we will see a rate hike a lot sooner than expected. I'm talking about 2022. At first they said 2024, then they pushed it back to 2023. I think they can't get away without raising it, at least minimally, by the end of 2022. So that is another reason that I'm bullish on bank stocks. Not just the stress test, not just the fact that they are able to lend easily if a recession did happen, not just the fact that they've retraced heavily within the last couple of months, but also because I do think the rates will raise, which is good for the banks. All right, stock number 3 is a sector that I think has not taken off yet. Well, it took off, then it saw a major retracement, and I think we will see a resurgence, especially considering the infrastructure plan that is on the table and the fact that the current administration is trying to integrate renewable energy into the new infrastructure plan. So I do think solar stocks will be a big part of that story. And I'm looking at TAN, which is the solar ETF. Now, obviously, you can trade individual stocks like Sunrun, which we're already in, or JKS, which is Jinko Solar. But if you want to have a stress-free solar investment for the long term, you can look at an ETF like TAN. TAN dropped almost 45%, almost 46% actually. So you're buying it on a heavy discount here compared to all-time high prices. Now, this is a type of stock, obviously, that I wouldn't put all my eggs in one basket, and I would continue to dollar cost average here. There is a chance that we do see some resistance at the 100-day moving average and continue to drop a little bit, but just take a look at TAN for the long term if you are bullish on solar for the years ahead. All right, and the last stock we're going to look at is actually in the airline sector. We're looking at AAL, which is American Airlines, and United Airlines. Now, this is a technical setup as well as a fundamental play. So American Airlines had to actually cancel flights the other day Not because there was no demand, but there was too much demand and they didn't have enough staff to fulfill the operations. Now, this is a good sign and you want to buy into this weakness. So American Airlines is basically trading flat as the market awaits whether they are going to up their staffing in order to meet this newfound demand. The demand obviously stemming from the lifting of the lockdowns when people couldn't travel to now pent up demand for leisure travel. Business travel still has a long way to go. And this is why I think airlines right now, and I've been saying this for months, and we've been in airlines for months, but airlines still represents a good opportunity for the long term. So if we take a look at American Airlines chart here, it's sitting at the 100-day moving average. If you were a shorter term trader, you do want to set your stop limit below the 100-day moving average and you can get out relatively unscathed, and your reward will be relatively significant if the stock starts moving up to pre-COVID levels. So currently it's trading at $22, sitting at the 100-day moving average. You could set a stop limit at around $20.50, maybe a little bit below. You see that it is oversold on the MFI. United Airlines almost in an identical spot here, sitting at the 100-day moving average. So I like airlines here on the retracement. I think that airlines still have a lot of value left. It might be a while before business travel is back to par, but the smart money makes investments when they are relatively cheap. So there will be people buying, United Airlines at $80 when we finally surge to that level, whenever that will be. However, for now, I do think that American Airlines and United Airlines represent a technical opportunity here that you can place a stop limit below the 100-day moving average and escape relatively unscathed in case the industry crashes for some reason or another. Anyway, traders, that is it for this video. Oh, and on the Nike thing. So obviously Nike pushed to all-time highs. We bought Nike at the retest of this support. I made a video on it. For those of you that watched and got into the play, congratulations. Obviously, I sent out an alert as well. We did sell covered calls on Nike, but it gapped up, the biggest gap that it ever had, up 15% because it absolutely killed earnings, beat all expectations. However, I also had an options play on Nike that didn't go too well. It was a slightly bullish options play, but I needed Nike to stop basically around resistance at around 145 or below. It blew past that, went to like 155. So I lost out on that options play. That ends our streak. We were on a 12 earnings play streak and the streak finally ended, but I'm still happy because if you're a fan of this channel, you know that we've been buying Nike for a long time as it is part of the retail reopening and the return to normal trade. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you're trading. What do you think of the Tesla story? If you want access to all of our trades, link is in the description below. All the tools that I use, those links are also in the description. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.